Is Snowflake, ticker symbol SNOW, a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Snowflake using Warren Buffett's investing framework. One of his investors even owns the business. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Snowflake is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Snowflake stock to your portfolio. Right now, Snowflake trades for $136.18 per share. In its last day of trading alone, it's down 3.38%. Since June of 2023, Snowflake is down 12%, which underperforms the market. Today, the company's at its 52-week lows. From its IPO, Snowflake stock is down 40%, while the S&P 500 is up 60% at the same time. While it's not good for shareholders, does it mean that Snowflake is undervalued? Let's try to find out. Today, Snowflake is down $100 from their 52-week high, and while it hasn't updated, they're trading at their 52-week low. How big is Snowflake? Well, today they have a $47 billion market cap. Warren Buffett's the biggest super investor with a holding of Snowflake valued at $863 million. It makes up 0.25% of his stock portfolio, and he bought it pre its IPO. Although it's likely not Buffett who invested, it was probably his portfolio manager Todd Combs who made the initial buy. He's the current CEO of Geico and very familiar with data and analytics. Combs even answered a question from Bill Ackman about Snowflake at the Columbia Business School breakfast. Now, getting started with metric number 1, we want the returns on capital to be greater than 14%. This is going to be really hard for Snowflake given where it's at in its business lifecycle. Snowflake's still in growth mode, and growing software companies can look pretty bad on this metric, as it's based on their earnings. Because of this, it may unfairly penalize Snowflake, but their returns on capital have been trending in a downward direction as a public business. That's not necessarily great to see either. These average returns are negative, so it's an X on metric number 1, but it doesn't tell us too much about the business yet. Now, what does Snowflake actually do? Founded in 2012, Snowflake is a data lake, warehousing, and sharing company that came public in 2020. To date, the company has over 3,000 customers, including nearly 30% of the Fortune 500. Snowflake's data lakes store unstructured and semi-structured data that can then be used in analytics to create insights stored in its data warehouse. Snowflake's data sharing capabilities allow enterprises to easily buy and ingest data almost instantaneously compared with a traditional months-long process. Overall, the company is known for the fact that all of its data solutions can be hosted on various public clouds, and Snowflake introduced the Data Cloud. Now that we've learned more about Snowflake, we want to see growth in their sales, earnings, and free cash flows. Their earnings look rough, and this has to do with their R&D expenses. They've increased these by more than 14 times in the last 5 years alone. Thankfully, the company looks much better when we look at their sales, gross profits, and free cash flows. In this time, Snowflake has increased their sales 11 times in just 5 years. The company's gross profits have grown even faster. They're up 14 times. As we learn, their earnings are down. They're 3 times more negative today than they were back in 2020. But thankfully, cash flows are the most important, and Snowflake now has positive free cash flows. They've had this every year since 2022, and they've been growing each year as a business. Today, they come in at more than $800 million. Because of the accounting for R&D expenses, we're going to give this to Snowflake. It's our first check of the day on metric number 2. In our third metric, we want to see that their shares outstanding are decreasing. Snowflake, not unlike many of its peers, is using their shares for compensation. Snowflake has diluted shareholders by 10% since going public. It's not the worst we've seen, but it's pretty steady. This is an X on metric number 3. Metric number 4 puts our last 2 metrics together. Here we want cash flow per share growth. Snowflake had negative cash flows until 2022, but they've steadily increased these in all of the last 5 years. They have positive free cash flows today, meaning it's a check on metric number 4. So far, we're split evenly. Snowflake has 2 checks and 2 X's. What will the rest of Snowflake's numbers look like? In recessions, it's companies with too much debt that can have the biggest losses and even go broke. Thankfully, this isn't an issue for Snowflake. Instead, the company is sitting on a massive cash cushion that started 2024 at $4.4 billion. Today, it's down somewhat with some spending, but they're still sitting on $4.2 billion in cash. Now that Snowflake has positive cash flows, they brought in over $1 billion worth in the last 5 years. These numbers look very healthy, and it's a check on metric number 5, where we wanted their net debt to be supported by the sum of their cash flows. Now let's look at our safety bonus before we figure out what Snowflake is worth. A key safety ratio that Ben Graham, the father of value investing and Warren Buffett's teacher, taught him was to look for a current ratio greater than 1.5 times. That's a measure of their short-term liquidity for how their total current assets can match their total current liabilities. Simply, it's how can they pay their bills in a hurry. Thankfully, Snowflake looks good on this. While it's been declining, today it comes in at 1.85 times. That's better than the ratio we're looking for, meaning it's a check on our bonus. Today, Snowflake can easily pay their bills. Now, the big metric of them all, metric number 6, which is also our first valuation, we want Snowflake's average free cash flows divided by their enterprise value to give us a yield greater than 5%. This would match the historical yield from the S&P 500 and give a risk premium to the 10-year treasury. We're using their enterprise value because it adds their market cap and their net debt together, so it helps us look at the company more like it's a private business. Today, Snowflake has a $43 billion enterprise value, and since having positive cash flows in an average year over this time, they bring in $731 million. When we divide those cash flows by their enterprise value, we get a 1.6% average free cash flow yield. In their last 12 months, they brought in $859 million of free cash flow. That divided by their enterprise value gives us a 1.9% current free cash flow yield. These both are coming in below the mark we were looking for at 5%, but the company is still growing pretty quickly. This means it's an X on metric number 6. But don't throw Snowflake out yet. Watch till the end to find out what they're really worth. We're using a discounted cash flow model for a second valuation. This is going to be a rougher estimate for Snowflake because of their fast growth and that they haven't been a public business that long. So take this with a grain of salt. We're going to use their current cash flows and then take historical growth assumptions for how these may look out into the future. Let's assume that Snowflake can grow their cash flows at 20% for each of the next 10 years. Then in the following decade, we'll assume this growth rate is cut in half. We're also going to add in their tangible book value to give an estimate of their net worth. Now, if we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, then today a DCF model with these assumptions says Snowflake's fair value is around $70 per share. That's still less than half of their current stock price, even though they're trading at their 52-week lows. Based on their past valuations and some big expectations for continued growth by analysts, today a GF value comes in at $263 per share. That's up $130 from their current stock price. Buffett loves the numbers, but it's the qualities of a business that are even more important to him. Let's look at these qualities through a long and a short thesis for Snowflake to find out what Todd Combs and maybe Warren Buffett likes about the business. Starting with a long thesis first, number 1, Snowflake could remain the only multi-cloud offering of its kind for much longer than anticipated, potentially allowing it to increase its top line more with minimal pricing pressure. Number 2, Snowflake could move to a subscription model from a usage-based model, boosting its monetization of its products. Number 3, Snowflake could also expand to other multi-cloud data needs, pushing spending per customer to greater heights. But it's not all sunshine and rainbows. Let's look at a short thesis as well. Number 1, other multi-cloud data providers may emerge like Databricks to compete with Snowflake, or in-house data warehouses at AWS or Microsoft Azure could potentially adopt a multi-cloud strategy. Number 2, Snowflake could fail to expand its data sharing network extensively. This would leave it vulnerable to competition with larger networks. And number 3, migrations of existing workloads to the cloud could occur at a slower pace. In succession news, Snowflake's CEO Frank Slootman retired in February of 2024. He was best known for IPOing software companies and leading successful runs in their stock, and for his amp it up management philosophy. Now let's put everything together for Snowflake. We learned the company goes 3 for 6 on the Select 6 analysis, and they also check our bonus safety metric. Their growth and their R&D expenses are what drags down the company's earnings, and they've continued to dilute shareholders, mostly for compensation needs. Even with recent slowdowns in their growth, Snowflake has still grown insanely fast in the last 5 years. While they may have some product weaknesses, they're already trusted by big businesses for their multi-cloud offering. Now, the number one question I get asked from viewers is how you can find undervalued stocks even faster. That's why I use this tool, which is going to show Snowflake's valuations today. It looks like there are still some lofty valuations on Snowflake, and right now their fair value comes in at just under $96 per share. That's still down $40 from their stock price, and it's way below their 52-week high or street target price. Right now, Snowflake still looks overvalued. To find undervalued stocks in the market, sign up for our investing tools and get exclusive bonus coverage of 86 stocks and counting.